please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
$10,875 is the first equilibrium that we are seeing now, and it's sustaining there.
We are clearly more positive on large caps over mid caps and small caps over the next few years.
Clearly, the restructuring drag on our communication business is no longer there.
Power Finance Corporation is the company under radar. The stock has fallen nearly 32% year to date and more than 44% from its 52-week high.
In terms of the agreement, there is nothing different from what we've had from the beginning, meaning from 1994.
The offer size as of now is 6,000 crores, but the green shoe option is not ruled out. It will definitely depend on the demand considerations.
150 points on the Sensex, about 40 points on the Nifty is where we are at.
Titan was the stock that made a move today, 2% higher on that stock. SBI really is your strongest stock now, so that one made a bit of a move.
Markets cool off after the morning rally. The Sensex gains close to 50 points. The Nifty ends over 10,850. Mid-cap sees sharp cuts in late trade.
Global markets await US Fed Reserve's rate decision. A CNBC poll points to a 25 basis points hike. Equities across Asia and Europe tread with caution.
PSU bank stocks and IT stocks keep the bulls in the game. Infosys leads the charge for the IT pack. Bank of Baroda is the top gainer amongst PSU banks.
Affordable housing companies get a boost. The government increases carpet area for middle-income group flats eligible for interest subsidy.
Page Industries hits a new lifetime high after extending its licensing agreement with Jockey till 2040. The company expects steady growth across all segments along with a margin of between 21 and 22%. Well, those were the top 5 stories which really defined the day's trading action. Hello and welcome to a fresh new edition of Markets Today Talk Back, the show where we tell you what really happened in those 8 hours of trading through these 5 headlines. I'm Prashant Nair. With me is my colleague Ekta Batra. Hi, Ekta.
Hi, Prashant. Thanks for that. Well, over the next 30 minutes, we will be discussing those top 5 stories and our experts will be answering your queries as well. Joining us this evening is Dipan Mehta, member BSE and NSE, and technical expert Nitesh Thakkar. Thanks, gentlemen, for joining in. Before we get talking about all of the questions and how markets fared today, Prashant, it was absolutely opposite from what happened yesterday. The markets gave up their gains.
Oh, and it was quite similar to what we saw day before yesterday, when in the last 1 hour markets sold off. Yesterday in the last 1 hour markets accelerated higher, but it was the opposite today. So it's actually the last hour is turning out to be quite pivotal. If you look at, step back a little bit and look at this in the global context, India actually did not do badly. Even yesterday, we were amongst the top gainers, top markets in terms of gains across the board. Today, most of Asia was down. The Indian market sold off from the day's high. But even then, India along with Japan were the 2 top gainers as far as the Asian stock indices go. So, not bad. And mind you, this comes in the backdrop of global cues, which have been actually very, very quiet despite that big all that happened on G7 over the weekend, then the North Korea-US thing. Markets have taken it extremely in a very slow fashion. There have been no dramatic moves in any asset class, let alone equities. And this is what happened overnight when we came into trade. We had absolutely flat global cues. So the big cue, which I think is going to maybe shake up things a little bit, is the Fed meeting and the Fed decision. And we'll have that when we come back for trade tomorrow morning. And the expectation is that there will be a 25 basis point hike, but at the margin, and I think our CNBC sort of network partners have been highlighting the opinion coming in from there as well. There is this fear that the Fed may surprise hawkishly. Let's see if that actually happens. As far as counting the points go, Nifty was some 40 points off the day high. The Bank Nifty lost about 122 points off the day high. PSU banks, IT, pharma were the top performing sectors. Pharma continues its run, although it came essentially from the day high, the pharma index lost half its gains. IT was up more than 1%. The PSU bank index was up almost 1.5%. For context, this is what indices have done over the last 6 trading sessions. So keep this in mind when you look at a flat day or a 30-40 point day. Nifty has gained over 300 points in the last 6 trading sessions, and the Bank Nifty is up almost 600 odd points or so. Ekta, but in terms of stocks, what was it looking like?
Well, it was definitely the pharmaceutical stocks which have seen follow-on buying continuing today as well. More for the frontline stocks. So Dr. Reddy, Cipla, Lupin, all of them gained. TCS was higher along with emphasis from the IT space. Separately, State Bank of India and ICICI Bank also were stocks which were in focus today. So both those stocks were in the green. In terms of a couple of losers, it included Tata Steel, Adani Ports, Z Entertainment, HUL. So a couple of these stocks did see some amount of profit booking. Important to add that there was profit booking in the likes of ITC and the HDFC Twins as well. Now, if you're talking about the broader markets, Idea, a sharp fall there of over 5% but separately something like even Alembic Pharma, Glenmark, all of these stocks were down, giving you an idea that it wasn't all of the pharmaceutical stocks that saw buying, it was only select frontline stocks. And interestingly, what stood out to me were stocks such as Quality, PC Jewelers and Manpasand. All of these stocks saw buying today and ended in the green, giving you an indication that maybe we need to see better quality stocks, see some amount of buying and sustainability in that kind of session.
Okay, so, let's take it to our guests now who are joining in on the show. Mitesh, your perspective as always before we get into other stocks, etc. What did you make of the day, the sell-off, and the late sell-off, and what may be in store tomorrow when we return?
Yeah. Good evening. So I think, we nearly met the target of 10,900, 920 on the Nifty, kind of tapered off from there. My worry comes from the Bank Nifty, which again failed to get past 26,750. Though still showing signs of range, basically 26,750 to about 26,200. But a failure to break out typically could mean that, there could be some kind of a pullback towards the lower end of the range on the Bank Nifty for the next few days, which could keep the Nifty's movement into check. The IT index looks positive to me. So overall, I would say that I think, broadly with this breakout which happened yesterday, we've kind of shifted the range on the upside to about 10,800 to about 10,920 and might consolidate and chop around in this range. If we start getting past 10,920, 930, then 11,050 could happen.
Okay, so you don't see maybe a downside below 10,800, Mitesh?
Not as of now. I think, it's a market when, the intraday indicator is still pointing upwards. If we start breaking below 10,800, I would be worried and I would even look at exploring more of short side trades. But for the time being, it looks like it might just be chopping range for the next few days to come by.
All right, fair enough though. So that sets us up as far as levels go. But before we move on to our second headline, here's some opinion. We spoke with one of the foremost well-known value investors in the market. S. Narain is CIO at ICICI Prudential Asset Management Company. He's bullish on large caps. He's been sort of signaling caution for a while. He still thinks mid caps are a bit more risky as compared to large caps. Here's Narain on the market.
We are positive on earnings, and because we are positive on earnings and earnings primarily coming from some of the large caps, I would say that we are clearly more positive on large caps over mid caps and small caps over the next few years. We continue to think that mid caps are relatively overvalued compared to large caps. See, the entire mega trend which played out, which is commodity price coming down and interest rates coming down, they help the mid caps and small caps. Now commodity prices are going up and interest rates are going up, which actually benefits the large caps. So we are still clear believers in this large cap trade over mid cap and small cap.
Okay, well, let's get to the second headline now, which is basically global markets, which was subdued today in trade. Asian markets closed lower, while European markets opened marginally higher. This is as investors have now shifted focus from the US-North Korea summit to the Fed Reserve's June meeting outcome, which is due later today. A CNBC survey has predicted that the Fed is likely to go a little further than neutral and increase interest rates. CNBC's Steve Leisman breaks down the Fed survey for us.
Okay, and that is the hawkish surprise that we were referring to earlier. We'll find out tomorrow when we are back for trading here. Okay, to the third headline, the third story of the day. The big gainers today were public sector banks, sectorally speaking. So PSU banks did well. We also had, the pharmaceutical pack, which did quite well. In the PSU bank space, Bank of Baroda, Allahabad Bank, State Bank of India were all up about 2% in the green. Along with pharma, IT was the other space which actually did very well. TCS, Infosys and HCL Tech were leading the gains. We've got questions now. So Twitter user Sri Harsha is writing in with a question on Tech Mahindra. He wants to know if he can buy the stock for the next 2 to 3 years at the current levels. So a reasonably long time frame. Deepan, what would you tell Sri Harsha?
No, I think there are better stocks in other sectors rather than IT at this point of time, and Tech Mahindra already has run up, and a lot of the benefits or gains which are to accrue to the IT industry because of maybe lower rupee as well as overall improvements in spending, IT spending globally. All those kind of cyclical improvements have got factored in. So I'm not positive on Tech Mahindra continuing its move up what we have seen last year or so. And I think it's better off maybe buying into banking or some of the other consumption-oriented stocks. I think that going forward also tech will continue to have very challenging times, and it's an industry where visibility is looking a bit difficult at this point of time. So I would best to avoid entire software and Tech Mahindra in particular.
Mitesh, on the chart, same view? I mean, not just Tech Mahindra, but IT stocks in general. Deepan is saying that there are better plays, and this one seems done for now.
No, I think there's some more space left on the upside. I think we've seen the Nifty IT enjoy good momentum, and a lot of stocks have reversed on the medium to longer term charts. Particularly stocks like NIT Tech, Mindtree have been showing leadership, while even stocks like Infosys, etc., are joining the party on the upside. So I think selectively, I think there's still more upside left. You need to kind of figure that out. But I would still bet on Mindtree, NIT Tech, and Infosys as my top 3 picks.
Okay, all right, let's get to our next query now. Naresh has written to us with a question on Punjab National Bank, has 200 shares which are bought at 110. Medium-term investor wants to know if he should hold or sell that stock. Well, Dipan, always an interesting one. When people ask on PNB, what would you recommend?
Well, I think it's very difficult to give a recommendation on PNB or from any of the other PSU banks because they have been completely, the declines have been astonishing as far as PNB and the other PSU banks are concerned, and you could easily have a relief rally at any point of time. On a fundamental basis, PNB still doesn't appeal to us, but I think all the negative is there in the price, and I think it's due for a trading bounce. From this point on, we only get positive news as far as PNB and other PSU banks are concerned as they start recovering part of the money which had turned non-performing, and that could lead to interest reversals as well as maybe a little bit of additional capital to lend as well. So I think that PSU banks and PNB in particular may be in for a good trading bounce for the next few months or so, but it's not a good long-term investment proposition at this point of time. Investors who are stuck in PSU banks can look at exiting out of PSU banks, going into private sector banks, and traders I think will have a good trading opportunity over the next 2-3 months or so in the entire PSU banking pack and PNB in particular.
All right, Deepan, so anytime can have a trading bounce, negatives priced in, but I mean, at this point, can't really see any big reason to buy in. We're going to take a very quick break here. Deepan and Mitesh are with us. We will come back and we continue to take your questions. That's coming right up, back in 2 minutes.
Welcome back. You're still tuned into Markets Today Talk Back. We have Mitesh Thakkar and Dipan Mehta with us to decode the markets and answer all of your queries. Let's get to the fourth headline now. Affordable housing companies get a boost as the government has increased the carpet area for middle-income group flats eligible for interest subsidy. In fact, let's listen in to Keki Mistry of HDFC and Gagan Banga of Indiabulls Housing Finance on the development and the impact of this move on consumers.
There might be 2 categories, 3 conditions that need to be satisfied. But if these 3 conditions were satisfied, then on any loan that person takes to buy a house on up to 1.2 million or 12 lakh rupees, there would be a 3% subsidy which should be provided by the government for the life of the loan. And that subsidy amount would be discounted to its present value and paid upfront to the lender. So effectively that works out to about 230 to 250,000 rupees of direct cash benefit that a customer gets. Obviously, it's a decent amount, it's a big amount, and to a middle income or a lower middle income person, such a big amount being received is a big boost and a big encouragement for him to buy a house.
I believe that this particular initiative of the government should increase the penetration by another 25% and take it in the range of 25 to 30%. So what used to be 20% of the borrowers, now about 25 to 30% of the borrowers will start qualifying. And this will be seeing a major impact in Tier 2 and Tier 3 cities. We are getting into 100 new Tier 2, Tier 3, Tier 4 cities. So this comes well in time and will complement the larger strategy that we have.
Okay, we've got a question coming in. We've got Devin Shah, actually he's a caller who's calling in from Ahmedabad, and he's got a question on Canfin Homes. Devin, what's your question?
Yes, I have purchased Canfin Homes from about a year back at 648, 250 shares.
Okay, I mean, so you basically bought it almost at the peak, all-time high. Price is about 361. What's your time frame, Devin? You can ride it out, hold on, or...
Should I hold it or sell it now?
Okay. Devin, a tough one. What would you tell him? Deepan, what would you tell him?
No, I think it's better to sell off Canfin. Yeah, I think it's better to sell off Canfin Homes. We have a negative neutral view on housing finance companies because of the intensity of the competition and rising yields. And Canfin Homes' performance was quite disappointing for the March quarter. I think if you want to be in the financial services space and in particular housing finance companies, then go for the best. I think you can go for stocks like HDFC itself, or maybe even Indiabulls Housing, which have generated good results for the past 2-3 quarters or so. And I think even PNB Housing could be quite interesting. There's the possibility of M&A action over there as well, and its numbers for March quarter also were quite interesting. On Canfin Homes, view is negative. Housing finance companies neutral, slightly negative. But if you still want to be in the housing finance companies, then the picks are HDFC, PNB Housing, and Indiabulls Finance.
Okay, well, let's get to the last headline for today, and it is an exclusive. Page Industries was the stock of the day, really. The company hit a lifetime high after it extended its licensing agreement with Jockey till 2040. Company is expecting a steady growth across all segments, along with a margin of 21 to 22%. Let's listen in to the management.
If you look at the split between innerwear and outerwear, innerwear would be around 70% and outerwear would be 30%, which includes socks. And we see, a steady growth in all these verticals that I talked about: men's innerwear, women's innerwear, outerwear for both, which we actually have termed as athleisure, multifunctional type of garments. For both men and women and kids is something that still very nascent as far as we're concerned. So we have a lot of room for growth in kids.
Okay, we got a question on Page. Rohit has tweeted us with a question. He wants to buy shares of Page and wants to know whether it actually makes sense, wants to know about the company. Deepan, what would you tell him?
Well, I think making a fresh investment at these valuations and this price, I don't know whether you'll get the desired returns. I think look out for corrections. They do come from time to time. Overall market corrections as well as correction in Page Industries. And if you can buy it maybe 10-15% cheaper or so, I think that will provide a little bit of margin of safety. But there's no doubt that Page Industries has been a stunning performer. And going forward also, I think the prospects just haven't dimmed. I think it will continue to remain steady in terms of top line, bottom line, and the kind of opportunity which is available and the premiumization which is taking place within innerwear. These trends certainly benefit Page Industries. So it's a great stock to own, but maybe not at this price.
Okay, Mitesh, quick technical call.
I in fact have a positive bias. The stock just made a fresh high, and I believe that I think on the longer term chart as well as in the short term chart, I think it's a buy. So I would be comfortable suggesting to accumulate or buy right now.
Okay. By the way, we have all these other companies, right? Rupa and actually there are 6 or 7 of these. Actually there are 6 or 7 of these companies. So it's not just one company in that space, but there's only one Page. Deepan and Mitesh, thank you very much, both of you, for joining us on the show. Appreciate it very much. Well, it's a wrap here on this edition of Markets Today Talk Back from Ekta, me, everyone on the team. Thanks very much for staying with us. We'll see you bright and early tomorrow morning.